In this video, we're going to talk about lots of exciting things. One of the main ones being how do you save tons of money and maybe consolidate some of your other debt. Stay tuned because I'm going to go through all of that with you. I want to take a moment to say thank you so much to all our veterans. I love VA loans. They're my favorite. I feel like it's the least that I can do to give back, to thank you for your service and the sacrifices you make, as well as the sacrifices of your family. What is a VA cash-out refinance? It might be a little bit different than you think. It actually falls under two categories. The first category being the one that you're expecting. If you're taking cash out and not just paying off your mortgage. That's what we know about cash-out refinances. But did you know that a cash-out VA refinance is also when you're paying off a mortgage only, but a mortgage that is not currently a VA loan? So if you're looking to refinance from your conventional FHA, whatever, you pick it, from a current loan that's non-VA into a VA, you're actually considered to be doing a VA cash-out refinance. What are some of the benefits of cashing out with your VA refinance? Well, if you're doing another type of loan that involves mortgage insurance and you're paying that monthly, how nice would it be to refinance to a VA loan with a lower interest rate and also drop that monthly mortgage insurance? That would be a great way to save automatically, even if you're not getting cash back at closing. Some of the things that you can use your VA cash out refinance for, if you want to do more than just pay off your current mortgage, would be maybe you want to consolidate some debt. Maybe you want to consolidate some high interest loans. There, of course, are pros and cons to this, such as you don't want to take a loan that might have 5 years left on it and refinance it for 30 years if you plan to have the new mortgage for 30 years. But maybe if you plan to sell your house in the next 3 to 5 years, then it might not be so bad to take an installment loan that could be a $400 monthly payment and a 7% interest rate, and go ahead and consolidate that into your VA loan with a crazy low interest rate like they are right now. You'd save money monthly, and you'd save money in the long term as well, because you'll be paying it off in full in the 3 to 5 years anyway. Here's a great example. I just had some consumers yesterday that were actually looking to refinance, and they were going to put more money in their pocket and not pay off their automobile. They didn't even think about paying off their automobile, which was at a 13% interest rate. I couldn't even believe it. 13% interest rate and around a $400 monthly payment. Well, they could borrow a little bit more on their mortgage and knock that out instead of worrying about borrowing less on their mortgage, so that their payment was, let's see what it might have been, $13,000, 30-year loan. They were at a 2.75 interest rate, $53 a month it was going to cost them in their mortgage, or $450-something in that auto loan. That's just one of probably several examples of things that you could use your cash out VA refinance to consolidate debt and put yourself in a better short-term and long-term position. Gotta take a quick minute to say don't forget to like the video and subscribe to the channel before I dive into the next section. I want to decipher the difference between a VA cash out, which we just explained, and a VA streamline, also called an IRRRL. IRRRL, interest rate reduction loan, basically. The difference is with an IRRRL, as I'll refer to it, is you're literally just paying off your current VA mortgage, not a different type, but your current VA mortgage. You only have one mortgage, not multiple, and you are just paying off that mortgage, rolling in your closing costs and prepaids, and you don't even need an appraisal for that option. You're not going to get any cash back at closing, but it's fantastic if you can reduce that interest rate and save yourself tons of money either monthly or long-term, so short-term or long-term. Just wanted to point out those differences between the true cash out and the actual streamline or IRRRL. The other thing I wanted to talk about today was the cost involved. The costs are going to vary from lender to lender, yes, but I want to at least give you some reference points. If you're doing the cash out, which is what we're going to talk about now, I'm going to do another video just on an IRRRL, so you can check that one out later for the cost involved in that one. But for the cash out today, where we're either pulling cash out or paying off a non-VA loan, the cost involved in that would be, number one, an appraisal. Appraisals do also vary from area to area and lender to lender. I would say a good reference point might be about $500. So you can expect to have that cost involved in your VA refinance. You're most likely also going to have a title company. They're going to charge their fees. They're going to charge cancellation of the current mortgage. They're going to charge recordation of the new mortgage. That has a lot to do with your loan amount. So not including title insurance, because that is really hard to calculate or give you a reference point, but just talking about maybe recordation, cancellation, title fees, maybe that's $500 to $700. And of course, you've got your title insurance on top of that. Then the other piece that you're gonna have is you're gonna have your closing cost, such as you might be paying for a credit report, an administration fee, you might be paying for underwriting fee. Lenders call them different things, and I have seen lender fees range from $0 all the way up to several $1,000s, just to give you a reference point for that as well. Last but not least, and I don't like to call it a cost because I don't believe it to be a cost, but that would be to set up your new escrow account. Most lenders will not allow an escrow account transfer, which means your new loan will start a whole new escrow account, meaning you'll get a refund of your current escrow account about 45 days after this new closing. I don't like to call it a cost because think about it this way. Even if you have no mortgage, do you pay home insurance? You should, and you probably do. And even if you have no mortgage, do you have property taxes? Absolutely. So those aren't necessarily cost, but it feels like it because you're starting a new escrow account, and that includes some cushions required to make sure that the account can handle some ebbs and flows. Those are things that you can think about when it comes to the cost involved or surrounding your cash-out VA loan. The last thing I'm going to talk about today are the myths surrounding VA loans. I want this to be so clear because our veterans have sacrificed so much and you deserve everything that you have earned. A lot of the myths are things such as you can't refinance to a VA loan when you're not currently in a VA loan. That is not true. Another one that I hear a lot is that if you're purchasing, I know this is a refi video, but we're talking about myths. If you're purchasing a home and financing via VA, that they will finance your closing costs and prepaids. They will not. You can try to negotiate the seller to help you with that, but you have to come up with that money. If not, they don't cover your closing and prepaids, although they will finance you 100% if you're eligible. Another huge myth that I'm hearing all of the time is that you can only use your VA benefit once. And that's absolutely not true and breaks my heart because it's such a good loan and you should not be missing out on that. There's actually not a limit to how many times that you can use your VA benefit to get yourself a VA loan. And last but not least, one of the other big myths I hear is that you can only have one VA loan at a time. Surprisingly, that is also not true. It depends on your eligibility, but I've known of veterans actually have as many as 4 loans at once. Again, depends on your eligibility and a number of factors, but that's another big myth that hopefully we can bust today. I hope that this is helpful for you today when we're talking here about VA and we're talking about cash out. We're going to do that other video talking about the streamlined option. Remember, you deserve and have earned these benefits. So always look into your VA loan, even if you think it's maybe not the way that you're going to go. Today's free download is going to be a cheat sheet that I've come up with, and it's basically going to walk you through the cost versus break even to do your refinance. You want to make sure that you're looking at the cost and the break even to make sure you're making the best decision, and don't get distracted by pretty shiny objects such as rates that seem amazing. Make sure it is beneficial to you. So check it out. Dropping the link in the description below. I hope you enjoy that cheat sheet. Drop me a comment below. Maybe the comment today could be cash out. Hoping this video has been very helpful. Love to hear from you all. I'd love to see cash out in the comments. I'd love to see a bunch of those comments saying cash out so that I know a lot of our veterans are getting benefits from this video today. Thank you for watching. If you have not subscribed yet, why not? Go ahead and do it. What's it gonna hurt? Seriously though, subscribe to the channel. Don't forget to hit the bell to be notified. Please do share these videos and the channel with your friends and family to help me spread my mission of mortgage peace. And since you're here with me today and you're visiting anyway, stay a little longer. Check out some of these other videos. I'll drop some links up here.